What's going on, guys? It's 11 Trading here again, back with another video, another breakdown tutorial. We're gonna show you a little bit more in depth the strategy that we posted in the last video and show you how you can use this to grow your capital. So let's get back to it. First things first, we find our higher time frame bias once again. Like I said before, this is very mechanical. This is basic as possible. We're not going to try and overcomplicate it. We just stick to the same checklist and we go through it until each thing's been ticked off. At that point, we enter. But until everything's been ticked off, we do not plan to enter. So first things first, find our higher time frame bias. So as you can see, we're in the daily time frame. This is USD JPY in the daily time frame for however long. Now we are extremely bullish, as you can see. It doesn't take much to see that, so we're gonna drop into the lower time frame, which will be the 4-hour now. Just see what we can see. So this is the trade that I'm going to be breaking down for you guys, and I'm going to show you how you scale into this also. As you can see here, we had the first trade, and I also scaled in the next day and rode that to full take profit also. So first things first, we found our higher time frame bias. Now we wait for a high resistance liquidity run marked here on the checklist. So as you can see, obviously we've been bullish, but this down move here does not validate bullish structure. This is simply just a retracement to a POI ready to continue in the bullish structured market. So this is also an order block I have drawn off that goes way off left, which I will go to shortly, but for now we're going to stay focusing on this part of the trade. So we found a higher time frame bias. The second part was wait for a high resistance liquidity run, which I said last time is a manipulated sweep of liquidity with candle closure above previous structure. The candle bodies is the most important part. The wicks just show you the manipulation, the liquidity sweeping, and the bodies are showing you where the market wants to move. So we've had a high resistance liquidity run with the candle bodies failing to close below the liquidity, which is also respecting this order block. So we've had our candle closure long. I'm just going to go into the hour time frame now. Only at this point, once we've had our high resistant liquidity run and candle closure long, do we look for an entry. So as you can see, let me just draw up this order block. This is the order block which created the break of structure. So we had our high resistance liquidity run, our break of structure with candle closure above. I've drawn out the order block in the hour time frame which created our break of structure, and now all we do is simply wait for a retest of this order block and continuation long following the higher time frame bias. So as you can see, we had our sweep, we had our closure long, we had our retest of the order block to absolute perfection. You don't really get much more pinpoint than that, and we've carried on our continuation. So this was we got tapped in on Monday, and obviously this is Asia session of Tuesday morning technically. So I would have just left this running throughout my day. I would have done the things I needed to do, and I would have checked back later. But as you can see also, we also had another high resistance liquidity run. We had a sweep below this sell side, candle closure above, closing above previous structure. I drew out the order block which created the break of structure, which is here, and I entered off of 25% level of the order block. And as you can see, our protected low, which was the manipulation, was our protected low. So the wicks did not stop us out. It did not want to come below our protected low. It's already swept the liquidity down here. The market doesn't want to come any lower. So we rode this out along with this one, the first one, to a full TP. Now here also we've had another high resistance liquidity run. We have swept out this liquidity, and as I said, we are in the 1 hour time frame. So this is 5 hours worth of trading. It was just kind of just consolidated. The market swept it, closed above. So realistically now we could draw out another zone, including our high resistance liquidity run here as our protected low, the hourly order block, including the protected low. Theoretically, I could set a limit order here on the 25% of this order block, wait for a retest, sweeping all of this liquidity into our zone, continuing off with the market direction, which is bullish. So it's very, very simple, guys. You just have to follow the rules and break it down. You're not wanting to trade every single day. I know we've been quite lucky here and we've had a trade 2 days on the bounce, but this is still really coming from this main swing here. This is just scaling in just to try and maximize profits, still following the checklist. So the strategy is really that simple, guys. It really is find your daily bias, wait for a high resistance liquidity run, which is here, candle closure above previous structure, retest in to the order block, continuation long. Stop loss always at the protected low, which is the manipulation which created the break of structure, which took liquidity. It is really, really that simple, guys. And if you can backtest this on your own charts, you can go through months and months of data and you will be able to see that this strategy plays out time and time again. It's so simple. It eliminates the fear, the uncertainty, because if you've backtested enough and forward tested enough, you will trust this setup because you have seen it play out enough times, and it will eliminate the fear and the uncertainty of not knowing whether you're trading on the right side of the market. So I'm just going to go back a little bit here, and as you can see, obviously we know the higher time frame's bullish, but here we had a high resistance liquidity run, a sweep here, candle closure above previous structure, which was our Asia high here. It created some more liquidity here, engineered liquidity, carried on above, swept this engineered liquidity, and it did actually sweep our protected low. But if your stop was a tiny little bit bigger, you would have stayed in and you would have caught that trade. But not every strategy is 100%, and you guys should know that by now. You will always have losing trades, but with the right risk management, as I said last time, you only need to win 30% of the time. So there's another example. High resistance liquidity run. Closure above previous structure. Retest in. Candle bodies were respecting 50% of the order block. It was just the wicks, the manipulation, which would have knocked us out. And we'll just go through some previous trades. I've had a very good few weeks. Most of June was very good. We had a high resistance liquidity run. Closure above. Retest into the zone. Absolute belter of a trade. Absolute belter. You just have to follow your rules. It's really that simple. And again, high resistance liquidity run. Closure above previous structure. Retest in 25% of the order block. Absolute. These are 131 pip trades, guys. If you was using a prop firm account, a 100k account, and you was risking 0.5%, that is unbelievable money, guys, that you could be making. Absolute amazing money. High resistance liquidity run. Closure above previous structure. Retesting 25% of the accumulated order block. Taking liquidity. Absolute belter again. This is still 68 pips. It looks a lot smaller, but 68 pips, guys. High resistance liquidity run. Candles failing to close below the liquidity, meaning the market does not want to go lower. Big explosive move closing above previous structure. Engineering liquidity. Sweeping that liquidity with a big manipulated move, respecting the 25% of that order block absolute perfectly. This is why the majority of the time, guys, I'm entering off the 25% level of the order block. Absolute banger, 198 pips. I'm predominantly more of a swing / day trader, but The beauty with these setups and the beauty of finding these setups in the higher time frame is they normally give you a much higher reward, meaning a bigger distance the market has to travel to take out the liquidity it's created. Too many people are stuck in the 5 minute, the 3 minute, the 1 minute, trying to catch 6, 7, 10, 15 pip moves, which a lot of the time it's so fractal, the market can have other ideas and absolutely violate your stop loss. So there's so much more peace of mind trading in the higher time frames, waiting for these setups to form. Yes, they take longer to form, but they hit. They absolutely hit. So once again, we've had this accumulated consolidation here, swept that with a high resistant liquidity run, closure above. You could also look at this as accumulation, manipulation, distribution. Retest of the accumulation, continuation. It's that simple. It's really, really that simple. Here's an example of a trade that wouldn't have worked. We had a high resistant liquidity run, closure above, engineering liquidity. The candle bodies respected the order block, which technically still validates it, but the wicks would have stopped us out. But you could have caught it again here. You could have high resistant liquidity run, taken this wick, candle closure above long, retest into the order block. That's still, what is that? Let's have a look, measure that. That is still a 93 pip move. It looks a lot smaller in the higher time frame, but come on, guys. You can do this. There's no reason why you can't do this. You have to keep it as simple as possible. There's no point overcomplicating it. There's no point of messing up your charts with crazy indicators. Keep it as simple as possible. Follow market structure, and you're in for a winner. Like everyone says, the trend is your friend, and that's the truth. That is the complete truth. There's no point trying to force sales in a bullish market. You have a much bigger percentage of winning following the market with a continuation than trying to catch a retracement. Retracements have always gone against me. You might be lucky a percentage of the time, but the retracements have always gone against me. I have such a better hit rate following the market. And like I said, for however long now, this pair has been extremely bullish. There is no point trying to short this at all. You see these big moves down, they're all manipulation. They're all sweeping out liquidity, continuation long. That is literally all it is. So I hope that breaks it down a bit more for you guys also, because there's a few more examples here. It's not just one trade. I've shown it play out in multiple scenarios. These are all trades I've taken. Yes, there's been a couple losses, but as you can see, there's been far more winning trades than the losing trades. So this strategy is very simple, very mechanical. It has to be mechanical. You have to stick to the rules. Come to terms with your own psychology, and once again, you will be profitable. It's as simple as that, guys. You just need to persevere, backtest, journal, and that is how you get correct data to prove you have an edge in the market. Following strict mechanical rules that are the exact same every single time, your backtested data will be accurate, more accurate than most. So stick to the rules, stick to the plan, execute only when everything's ticked off the checklist, and it eliminates the fear. So I hope that clears it up for you guys, and we will see you on the next video.